Namaskar and a very warm welcome to all of you to this course on Introduction to Accounting and Finance for Civil Engineers. So in this first lecture, we'll do an overview. Before that, let me introduce myself and my colleague. My name is Sudhir Misra and I teach at the Department of Civil Engineering in IIT Kanpur. I have been here for about 25 years and I'll leave it to Professor Jha to introduce himself and proceed with a few slides.
Good morning to all of you. I'm Kumar Neeraj Jha. I'm with the Department of Civil Engineering, IIT Delhi. I'm with this department for last 11 years or so. Prior to that, I was at IIT Kanpur for a brief period. And before that, I was working for Larsen & Toubro Limited for quite some time. Now, I'll just introduce you to the few key terms that we will be encountering in this particular course. We will be dealing mostly with construction economics concept, the concepts of finance, and the concept of construction accounting. We will also tell you briefly the role of civil engineers, or for that matter any engineer in the modern context. When it comes to construction economics, it is basically the allocation of scarce resources. Now, as you know, in any construction projects we employ a large number of labor forces, we employ a large number of staff, we have plenty of equipment, we have plenty of material, and we have lots of money involved. These are the typical resources in any construction projects we employ. Now, when it comes to construction economics, it is basically the allocation of these resources in a profitable manner. On the other hand, when we talk of construction finance, it is the allocation of financial resources in a profitable manner. I will also introduce you to the term construction accounting, which is slightly different from other accounting systems. Because of different reasons, we will see when we come across in some other lecture. But as far as construction accounting is concerned, it's like any other language of business. And as you know, in any language, you have to follow certain rules. For example, how to record a transaction in construction accounting, how to summarize those transactions, how to prepare reports out of those transactions so that it gives useful information. We'll like to introduce you to these concepts. We'll also introduce you to some of the key reports that we generate at the end of accounting processes, which are namely balance sheet, the profit and loss account, and the statement of changes in financial position. Now, you would be wondering why at all we are giving emphasis on this accounting. But as you know, accounting is a very important aspect in any business. And it's not only helpful for an engineer, but it is helpful to many stakeholders, as we will see. For example, if you look at a financial analyst or a credit rating agency, or for that matter, as an employee itself, you'd like to see how your company is functioning. What are the key parameters on which it is lagging? What are the key parameters in which it is showing good signs? So you will find, depending on the stakeholders, these financial statements convey a lot of information. And now, as I told you, also have to understand the role of engineers in today's context. Now, gone are the days when the role of engineer was to just come up with a design. These days, your design is not complete unless you talk in terms of the cost. So, as an engineer, you have to find out a number of alternatives to do a particular job. Let's say, for example, we are working for a construction project and we are producing concrete. Now, there are different ways in which we can produce concrete. For example, it could be manual concreting, it could be concrete production with the help of a 10x7 mixer, it could be a batching plant, or it could be a ready-mix plant itself. Now, you'll find that the cost of producing the concrete through each of these different methods may change. Now, as an engineer, you have to find which one is the best alternative for a given situation. Sometimes you are producing very small quantity of concrete. It could be a manual mixing method that would be economical. But when you are producing large amount of concrete, you may find that establishing a batching plant would be the most economical option. So as an engineer, the role of yours would be to generate a large number of alternatives to do the same job and to find out which one out of them is the best one. Owning the cost of a design is very important. It is not enough just to give the design, but you also have to talk in terms of cost. Now, coming to the different modules in this particular course, we have organized it in small modules so that it becomes more focused. So we'll start with the introduction to economic decision making. We will let you know what are the key situations as an engineer which you face. We'll also like to introduce you to different construction equipment. How do we carry out their costing? How do we generate revenue out of them? Then we also like to introduce you to the concept of cash flows, because you'll find that any construction company, it enters into a large number of transactions on a daily basis. When we talk of transactions, it is basically the flow of money from one hand to the other. So a number of transactions are entered in a company on a daily basis. For example, you may be getting the salary of, you may be realizing the bill from your client, you may be paying to your suppliers, you may be paying to your construction equipment hiring agencies. So these are different ways in which cash is coming to the company as well as cash is going out of the company. So we try to put them in the form of a graphical representation so that it gives you a correct picture at what point of time, how much money entered into the system, at what point of time, how much money went out of the system. We'll also like you to introduce you to the concepts of evaluation in the context of public sector. As you know, private sector working and public sector working, the purpose are different. In the public sector, we do not give emphasis on profit making or those financial issues, but as you know, government also has got limited funds. So different projects are competing, and in order to find out where we have to invest money, we need to carry out some analysis. We will introduce you to the basic terminologies of accounting. For example, we would introduce you what is a ledger, what is a journal, what are cash transactions, what are credit transactions, what is a single entry system, what is a double entry system, and we will introduce you to different financial accounting systems also in the context of construction. Remember, construction is a slightly different compared to other accounting systems, because when we talk of any construction project, it spans into a long period. So some of the projects may be running into 4 or 5 years. So you find it spans over different financial periods. We will try to introduce you to construction accounts and financial statements. As I told you, we will introduce you to the balance sheet as well as profit and loss account. As you will understand, our focus here would be to make you understand what is inside those accounting statements. We are not here to make you prepare those statements. Of course, we will do it with the help of some small examples, but our focus would be to make you understand how a balance sheet or how a profit and loss account should be read. When we should understand, okay, this is a danger sign, this needs improvement. So these are the things we would like to understand from the various accounting systems. Now, coming back to the economic decision making, you will find as a civil engineer, you come across many situations wherein you have to select one design out of many designs. For example, you have to construct a highway from a city A to city B. There may be different competing routes. So A to B, I may reach it through points C and D, or maybe I may reach them through points X and Y. Now, each of these routes will have different cost implications. We'll try to make you understand not only in terms of initial cost, but also in terms of life cycle costing. How, first of all, we draw the cash flow diagram, how much money is coming, how much money is going out. We'll introduce you to the concepts of interest and different present worth, future worth method of comparison. And then at the end of it, we will come to know which alternative is the most appropriate one. Likewise, another examples could be choosing one construction methodology out of several construction methodologies. Or for that matter, we have to have replacement analysis. For example, today you purchase an equipment. Now that equipment is working fine, but at the end of it, we need to replace it. So when do we find this is the right time to replace an equipment? That is part of one of the lectures we will come across. Now you have to understand one thing, that if you are continuing to do a thing in a particular manner, it is assumed that you have found that to be the most economical one. So if you are not changing anything, if you continue to do nothing, we in economic term we call this as do nothing option. So if you continue to adopt to do nothing, it means it is believed that you have already arrived at an economic decision that this is the best way to go. We'll also like to see various investment decisions. We'll try to understand which one out of them is the risky one, which one out of them is a non-risky one. We'll try to calculate the risk associated with each of the investment options. We will explain you various probabilistic methods through which you compute the risk associated with the given financial proposal. As it comes in the case of public projects, as I just now told you, there may be situations in which a large number of projects are competing against each other. So as an engineer, government public sector engineer, you have to find out which one is the best one. And as I told you here, the profit is not the main motto, but as you know, government also doesn't have infinite money at its disposal. So we need to know how much is the benefit and what is the cost to put up that particular facility. So as long as my benefit cost ratio is in excess of 1, we say, okay, this project can be taken up in further evaluation processes. Likewise, we will also take up in some lecture the break-even analysis. Say, for example, you have put up a batching plant and you find that there are sales. So we would like to know how much we should produce in order to make sure that the company recovers the various costs that it incurs over a period of time. So in the beginning, you will find that the total cost will be much more than the revenue that it generates. But then for a particular volume, you will find the company would be in a position to recover all the costs that it incurs. So that is what we will be studying in the case of break-even analysis. Now, whatever situations I have described you just now, you will find that there are few things in common in that. First one, you will find that each one of them involves some monetary consideration. Now, each one of them involves certain money. So whether it is replacement, whether it is equipment buying, anything, whatever options I told you just now, they all involve certain amount of monetary considerations. Now, as an engineer, I also told you that you will be told to generate a large number of alternatives, and then based on the concepts that you will be learning in subsequent lectures, you will be in a position to evaluate each one of these alternatives and then to come up with the best alternative. So this is what we will be following in a systematic manner in the lectures to come. To proceed further, we will also introduce you to the various stakeholders in a construction project. Now you will find that construction projects have become very complex these days. There are a large number of stakeholders involved. You have the financiers, you have the concessionaires, you have the contractors. Contractors also have become very big in size. They can do the design, they can do the engineering, they can do the procurement and construction all on their own or based on the support that they receive from subcontractors. It involves not only civil engineering, but it involves electrical, it involves mechanical, you have instrumentation, you have many areas which are involved in modern projects. Now, in these contexts, and considering that there are a lot of uncertainties and the project duration are long, we need to understand the construction accounting statements and how to carry out the construction financing. These are very important in the current context. I will also introduce you to the situation wherein we need to consider the time value of money aspects. You know, money loses its value over a period of time. Not in terms of the monetary value, but the worth, it loses its value due to many reasons. We are not going to look into all those reasons in this particular course, but you will have to understand that, let's say, 100 rupees today is not exactly 100 rupees 1 year hence or 2 years hence. So in some of the lectures, we will introduce you to the concept of time value of money. We will introduce you to the different interest formula, and using the cash flow diagram concept, we will be in a position to find out the equivalence of one alternative against the other. We will also introduce you to some of the options like payback period methods, net present value methods, internal rate of return method. These are essentially to evaluate two alternatives at a time. So suppose you have alternative A and alternative B. Which one out of them is the best one? That is what we are going to take up in one of the lectures. Now, when it comes to stakeholders, as I told you, modern projects involve a lot of people, a lot of companies. It could be client, it could be designers, it could be contractors, it could be investors, regulators, users. So you see, there are huge number of stakeholders that are involved in construction project. Now, if you notice each one of these stakeholders, you'll find their objectives hardly match. So while a client would be interested in getting his projects on time within the budget, contractor would be trying to earn as much money as possible through that particular project. Likewise, your suppliers would be willing to supply you material at the designated profit margin which they have for their companies, right? So you find there are uncertainties, there are difference in objectives, there are conflicting objectives, yet in spite of all these factors, you would like your project to be completed on time and within the budget. Now, there are different facets involved in any construction projects. In addition to your schedule and cost, you have quality parameters, you have safety, you have dispute. Of course, not all these we will be touching in this particular course. There are certain other specialized courses wherein we teach all these parameters. But in this particular course, as I told you, we will be mainly focused on the understanding of construction economics, finance, and accounting aspects. In one of the lectures, we will introduce you to the concept of depreciation. We will try to tell you what are the different ways in which you can calculate depreciation. For example, you will understand what is a straight line method of depreciation, what is sum of years digit method of depreciation, what is double declining method of depreciation. I will also introduce you to the concept of depreciation in context of evaluation of different alternatives. So, we will tell you what happens when taxes are taken into consideration, how it changes your cash flow diagram, and then subsequently how it changes your decision. In the context of a project, you will find when an equipment enters the site, it comes with a particular book value, then during its usage, its book value depreciates. So, we will tell you how to calculate the depreciation for those equipments which are commonly used in the context of a construction project. I will also introduce you to the concept of buying versus leasing, then renting versus owning. These are the concepts that we will be discussing in one of the lectures. And as I told you, we will also introduce you to the concept of replacement analysis, wherein you will come to know what is the right time to replace an equipment. This is based on the total cost, which includes the purchase cost, the operation and maintenance cost, the scrap value, and so on. We will tell you how to calculate the project cash flow diagram. You will find that project cash flow diagrams are slightly different than the normal cash flow diagrams because in order to draw project cash flow diagrams, you have to refer to different documents. For example, you have to refer to bill of quantity, you have to refer to the contract document, you have to know the schedule of the project, and in addition, you must also know what are the key financial conditions involved in that particular project. This will enable you to know at what point of time you will receive the money and at what point of time you will have to spend the money. We will discuss capital cost and operating costs in context of acquiring assets. We will also let you know how to calculate revenues depending on the stage at which a project is. We will discuss what is working capital, what are the sources to mobilize working capitals, and we will also discuss key features pertaining to sensitivity and break-even analysis. In the context of public sector projects, we will introduce you to the concept of benefit cost ratio, wherein we will try to calculate the benefit to the public and cost to the government. This evaluation we will carry out for 2 alternatives at a time and then subsequently for more than 2 alternatives. Now, whenever you have got more than 2 alternatives, we do not do the conventional methods of net present worth or future worth or annual cost and worth method, or rather internal rate of return method. We will use the concept of incremental analysis. So, it could be either incremental rate of return method of analysis, or it could be incremental present worth or incremental future worth. We will also discuss the concept of capital rationing when the capital is scarce and you have large number of competing projects, how to select a project from the limited fund. That is what will be the objective of this particular lecture. Then, as I told you, our focus would be to explain you the different nuances of construction accounting. In that, we will come across different key terms like the assets and the liabilities. Under assets, we will see what is a fixed asset, what is current asset. Likewise, in liability also we will see long term liability, short term liability, We will understand what is debit, what is credit. We will also try to explain you the profit and loss statement for a given period for a particular company. We will see what are the different avenues for revenues and what are the expenses that a particular company incurs on a day-to-day basis. Then we will try to explain you the concepts of working capital, equity capital, debt capital, and so on. We will also try to explain you briefly the different forms of businesses, the role of financial managers, what are the key accepted principles of accounting, the concepts of bookkeeping, the term journals, ledgers, the trial balance, the accounting cycle. All these we will be covering in our subsequent lectures. Then one important aspect that we will be covering in construction accounting would be to understand how to recognize revenue. There are different ways to recognize revenue for a construction project. We will see all of them. We will explain you each and every term that are involved in a balance sheet or for that matter profit and loss accounts. We will also explain you what are the key parameters to look into to understand the health status of a particular organization. We will also introduce you to various financial ratios which indicate the short term soundness of the company or the long term soundness of the company. So, we will explain you different types of ratios as well. Now, as far as the conduct of this particular course is concerned, I will request Professor Misra to outline the total syllabus and the basically the plan of the particular course. How to go about it from here onwards. Professor Misra, please.
Many thanks, Professor Jha. I am sure you understand that we have a fairly packed program in the next couple of weeks when we will go through a lot of jargon. We will try to make it as simple as we can, so that as engineers you are able to understand financial statements. Now, as far as the conduct of this course is concerned, we will largely follow the guidelines of NPTEL and MOOCs. This particular one is a 8-week course where about 20 hours of material with 5 lectures of about half an hour each will be uploaded every week. Assignments will also be uploaded at the beginning of every week and the solutions the following week. These assignments will be graded and your score will be known to you. In case of any difficulty, for example, you may say that I marked the question right, my answer was right, it matches with the key that was given, but it has been graded wrong, I have not been given credit for it. Those kind of difficulties may arise sometimes, and for that you please feel free to contact us. There will be a forum which will be managed by the teaching assistants with us, and I can only assure you that all your queries and comments will be addressed, not necessarily very expeditiously, but we will try to be as prompt as possible. Please also understand that out of the 8 assignments that we will be giving in this 8-week course, best 6 will be taken for the award of the grade. That is, we will take the best 6 and use those to compute the final grade. As far as the final grade is concerned, there is the option of an examination and certification, which some of you may take, may not take. There will be probably a fees associated with it. Now, as far as the exam and certification part is concerned with that fees, there will be one final online exam at the end of the course, which will be for 3 hours, and it will cover the material that has been covered for the entire course. Apart from new questions, the final exam will also contain some questions from the assignments. So, my submission to you, very strongly I would recommend that please do the assignments seriously on your own and try to understand the principles that are involved. If you do not understand a particular question, there is always the discussion forum which you can use to reach us, to resolve the problem among yourselves, and so on. There will of course be certain new questions which you probably would not have seen, and they will be part of the final exam. The final assessment of performance will be done by assigning 25% of weightage to the home assignments, that is the best 6 out of the 8 as I mentioned, and 75% on the final examination. Based on this final performance, a certificate will be given to those who pass this course. Now, with that background, as we go along at the end of each lecture or in the module or through the discussion forum, I will try to help you with providing the kind of reference material that you may use to gain more insight into the subjects that have been covered. As Professor Jha has also categorically stated, the objective of this course is not to make accountants out of civil engineers, but it is only to expose the civil engineers, or for that matter any other engineer, to the kind of nuances of finance and accounts, which is very, very important in the modern day. With this, we come to an end of the discussion in the first lecture, and I look forward to seeing you in the next one. Thank you.